So a very warm welcome to all of you for taking the time to come and join us today at the Maybank Securities 2024 Market Outlook and Fengshui event. My name is Esther. I'm your host today. So before we begin, I'd like to extend a warm welcome to our Maybank Securities CEO, Aditya Leroya, and to Alex Torhager, our Head of Retail, our speakers, Dr. Chua Hak, Mr. Thilan Wickramasinghe, and our esteemed presenters from LMS Compliance, Centurion Corporation Limited, and United Hampshire US REIT. And of course, not forgetting our Master Ken Koh, our Feng Shui consultant from the House of Feng Shui. So this morning, we have a very exciting lineup of activities just planned for all of you. So stay to the end, please. There are prizes to be won. So we will begin with an economic and market outlook, followed by our Feng Shui session, and short presentations by our corporate presenters. There will be opportunities for Q&A after each segment, so please pay close attention. Following the talks, we will have a dynamic dragon and lion dance in the new, to welcome in the new dragon year. And finally, around 12:30 or 1 o'clock, we will be going to lunch. So please, I invite all of you to sit back, relax, and just enjoy this morning with us. So without further ado, I'd like to invite Dr. Chua Hak to come on stage. Dr. Chua is our regional co-head for macro at Maybank Investment Banking Group. Hak Bin.
Yeah, thanks for joining us this morning. I co-head the macro research from Maybank, and I'll be going through the outlook that we have for this year ahead. I was reading the horoscope book, and I'm a horse, and unfortunately it doesn't look like a very auspicious year for the horse. So getting a bit worried now. But basically, we think there are green shoots showing up, especially in the fourth quarter, and that should spill over into this year in a very fragmented world, given what's happening in the US and China. So we think that growth will basically be pick up. For finally, we are seeing signs that exports, manufacturing is all picking up. So we saw that in the GDP numbers even for Singapore, got a lift to 2.8% from the fourth quarter, from the 1.1 in the third quarter, and generally, that should lift overall GDP growth in Singapore roughly to about 2.2% looking this year, as opposed to 1.1 last year. So three themes that we're highlighting: these green shoots. And in part, we think it's basically supported by a pretty buoyant US economy and spending now finally on chips and electronics. Second point is that you have to take a view on whether the US is headed for a recession or a soft landing. We're on the soft landing camp, and I'll tell you some reasons why we think that is the case. And for China, that's the last theme. Unfortunately, it is the dragon, but we think it's going to be a pretty lethargic dragon. I think some of the data is kind of worrying. We don't expect that part to get a big lift. But I understand that Ken may have a different view about China later in this year. So this is the forecast for Singapore. So really growth picking up to about 2.2, 2.1, kind of closer to the normal range. Inflation coming down, but still a bit higher than historical levels. So we expect the central bank to still stay tight, essentially maintain the appreciation of the Sing dollar to try to curb imported inflation. Interest rates should start coming down for Singapore in the second half when the Fed cuts, but we're looking for only 3 cuts. The market is actually looking for 6 cuts. Markets were expecting cuts to start in March, but we think that it will only materialize maybe in September. So the US dollar will probably stay supported in the first part of the year. This is what we mean by the balanced growth, because this surge that happened at the start of last year was the revenge spending on services. So economies opened up, and suddenly everybody started traveling, dining. The problem is when you buy all this stuff on services, you don't need to buy it from Asia. It's all your travel, your dining, your flights, and all the goods that they already bought during the pandemic. So even though the growth was pretty decent in the US, we didn't feel it at all, and it showed up in our exports. Exports were still contracting for 9 months. But our point is, at some point, you have to replenish. You have to buy your electronics goods, your laptops, your car, your new model cars. And I think that's what's starting to happen. So we are seeing that green shoots shows up in the export numbers for Singapore, shows up in non-ROE exports, shows up in the manufacturing numbers, and we hope that that can be sustained for this year. Shows up in the PMI numbers, which has gone up above 50, and electronics PMI as well. So I think all this is pretty encouraging signs that hopefully the momentum will continue. Chips as well, right? I mean, chips is the key ingredient for anything, and whether it's your electronics or laptop, a typical EV car would require double the number of chips of your internal combustion car, and of course, if you believe in the AI boom, you need even more powerful chips. So that's risen. There are some professional chip forecasters out there that thinks that the growth of chips could be 20 to 30%. Yeah? So that's important. A big proportion of Singapore's electronics and exports is semiconductors, and there are also being plans for investments in that space. We also look at U.S. retail inventories. So just gives a sense that basically, there was a lot that was accumulated during the pandemic, and now it's slowly being wound down over the whole of last year. Some of the retail inventories on electronics, for example, is actually negative. So at some point, firms have to replenish if sales are doing pretty well. And actually, look at the December retail sales that just came out for the U.S. Retail sales price on the upside. But actually, electronic sales for December went up 9% in the US. So they have to start buying and stocking up. So that's pretty good news. And it shows up in sort of trade-related services. As you know, Singapore is a big shipping hub, cargo hub, and the container throughput is rising year on year now, close to 13% year on year. The sea cargo as well, 6-7%. So that's starting to help. The other kind of big question is, loan growth has been terrible in Singapore. If you look at the whole of last year, it's been negative. That's the grey line. It went down as low as -6%, October. And then suddenly we got a -3% in November. Right? We hope that that's kind of the turning point. I mean, banks is a pretty big component in the STI. And our Malaysian bank analyst tells us he was a bit surprised, Desmond, that Malaysia bank loan growth only ticked up to 4.9% in November from 4%. So usually what happens if activities and orders are picking up, he said it was a drawdown of working capital. So some firms may finally take that overdraft and buy that machinery that they need finally. So we hope that materializes because the business loan growth for the most part of this year was pretty weak. But it was also seen that loan growth has stabilized in most of the other ASEAN countries as well. Stopped falling. 1 month we can't extrapolate too much, but if the demand picks up, this loan growth might start picking up, and maybe people will relook at the banks again. Also, the other key point is, 5 years ago, if U.S. orders was going up, everything went to China. We are a small piece of that, the whole trade portion, but it's a different world today. Orders goes up, where did it go? Well, it's not really all going out to China. A lot more will be coming to ASEAN. Will be going to India, going to Vietnam, a bit to Singapore, come to Malaysia. This chart just shows that compared to 2008, when Trump started the trade war, the percentage points that U.S. buys now from China has fallen by 5 percentage points, that share. We don't have last year's figures, but that share is still continuing. So where do they buy from? They're buying a bit from Canada, Mexico. They're buying 3 percentage points more from ASEAN. And so I think that's the big story, that this time it's a different world. It's a fragmented world, and there are orders. A lot of companies here in ASEAN and Singapore will benefit from it. And it's not just the US side. This is the data from China side. Europe used to be the largest trading partner for China, but that has changed. You can see the red line is ASEAN. ASEAN now is China's largest trading partner. Europe has dipped. US is the yellow line at the bottom. What it means that when China demand really picks up as well, then ASEAN should also be a bigger winner this time. So we're more leveraged to a global trade recovery. Unfortunately, China's import growth is not very strong. It's only like, I didn't show the chart here, but only about 1-2%. But I'm surprised that, for example, in December, Singapore exports to China went up 22%. So maybe it'll be a different kind of flow, but clearly the trade between US and China has come down. The second point is about the soft landing. I got to say that we were one of the ones at the start of last year that, oh my God, the Fed is going to hike interest rates to 500 basis points, right, to over 5%. How can the US and the world economy withstand? So we were looking for a shallow technical recession. We still thought it was technical because the US consumer was in a pretty good place. Well, the US economy has defied gravity. In fact, the third quarter growth was 5%. That's Q on Q, quarter on quarter. And we thought that maybe fourth quarter was slow, but some of the trackers are showing that the US economy is still growing about 2.4% in the fourth quarter. So what happened? I mean, one side of the story is the fiscal. The US, we all understand that the government had to spend during the pandemic and they ran a very large fiscal deficit, but actually the US continued to spend after the reopening. So they still ran a fiscal deficit that was over 6%. In fact, IMF estimates that the fiscal deficit last year is roughly 8.4%. And this year it will still be 7.2%. And there's no sign that they're going to pull back, especially ahead of the US presidential election. That's pretty, so that's still a big fiscal support. Compared with China, for example, and they were struggling so hard to raise that fiscal deficit from 3 to 3.5% last year, maybe 3.8. It's so reluctant to spend, whereas the US is kind of quite willing to throw the money. But there was also the industrial policies in the US, what we call the CHIPS Act, as well as the Inflation Reduction Act. The CHIPS Act basically gave a lot of money for you to set up a semiconductor plant in the US. So, you got the likes of Samsung or TSMC or Intel and all that in certain states. And so in an environment where interest rates were rising, I wanted to show that investment and construction in manufacturing was actually going up, which is represented by the red line. And the yellow line is the surge in manufacturing jobs. Usually when rates go up, people pull back investments, they turn cautious, but this is quite the opposite. So that helped to offset some of that. The other big story was this excess savings. So we all had to save actually during the pandemic because we were all stuck at home. We couldn't go out. We couldn't travel, we couldn't dine. So all the countries' savings went up one notch. But in some countries, the savings went up even more. The US, because they had two big handout plans, one each about $1 billion roughly. And also Singapore. Singapore savings went up because the government was pretty generous here, right? We had drawdown on reserves, and there was 40 over billion that was handed out. In certain countries, like Malaysia, there was no big handout, but they allowed you to draw down on your EPF. But that's a bit different because that's the people's money. In China, actually, there's a very poor transfer system, and actually the citizens doesn't get very much. So so countries like US basically got two big lifts, to savings rate, estimated about 2.4 trillion, and then the big question is, hey, they thought by now the savings would have been all depleted, the consumers would have used it all, and therefore we're going to go into a recession. But the Boston Fed recently came out and looked at the figures. They estimated that the US still has over $1 trillion worth of savings that's not used. And therefore, $1 trillion is pretty much enough to last this whole year. Right? So there are some other studies out there. A Bank of America survey showed that the average cash balance for a US account was about 3,000 before the pandemic. Now it's roughly about 13,000. So that's still quite a bit of a buffer, which therefore I think we're on the side that the US consumer is in fairly good financial shape. There are also studies out there showing the very peculiar behavior, because that red line and the trend line is that Americans dissave, they go below what is the trend savings rate. But you look at the other countries, Japan, China, Europe, UK, they just go back to that trend line. So other countries, they don't try to dissave, they actually use it as precautionary savings. So the Americans look pretty exceptional. So this one just gives a sense of the interest payments. They are also transferred. The other argument is that even if you're doing nothing previously, you basically earn 0.1% on your interest rate. But now by doing nothing, the government's going to pay you 4 or 5%. Actually, it goes back to your bank account, and that doesn't look too bad. The job market is still tight. The job vacancy, openings to unemployed persons 1.5 times. So all said and done, we think that the Fed can only cut much later, not what the market is expecting. Cut only in September. Market is looking for March, which is too aggressive. And therefore, this is the 3 months Singapore interest rates, the SORA, the new benchmark. We think that it can only come down in the second half of the year, hopefully from the current 3.7 to 3.25%. This is the Sing dollar near. This is what the central bank manages on terms of the monetary policy here. So basically they've been allowing roughly what we think is a 1.5% appreciation a year to contain imported inflation. You can see that it's actually hugging the top side of the band, suggesting that MAS has to intervene quite heavily to stop the Sing dollar from appreciating too much. The MAS is actually shifting to a quarterly meeting schedule from this year. So they'll be meeting in January. Previously, it was just twice a year, and we expect them to maintain at that pace. So it's not too bad what you're getting on a Sing dollar. You get 3.7% on a T-bill, plus you get a 1.5% appreciation bias, which also suggests to me stuff like the Sing Ringgit cross will probably quite decisively break through above 3.5. The third point is China. We just looked at the various angles. We're pretty cautious about the outlook. We're forecasting 4.4% growth this year. That's below the government's about 5% target. And actually, we didn't like the kind of a window dressing that happened for the fourth quarter. Headline tells you 5.2, but actually they changed the base of the 2022 figures. So if you took that out, the actual figure was actually about 4.8. And actually, if you look at nominal GDP growth for China, it's only about 3.5% because the economy is in deflation. The other way to look at it is the quarter-on-quarter China growth in the fourth quarter was just 1%. You analyze that, that's only truly just 4% growth. So I think China's going through a rough patch. This is the outbound China tourists, which is the black line. Our point is actually for the first 6-7 months when they reopened, it was going pretty well. It was like the revenge spending of the Koreans. We just benchmarked on the same time when they reopened. But by July, it's lost steam and it's basically flattening out. It looks more like the Japanese behavior. They didn't come back in a strong way to the ASEAN markets. But on total, our visitor arrivals relative to pre-pandemic levels is roughly about 80% so far. But you can see that this China tourist numbers kind of stopping dip. One of the puzzles in the first half of the year was that they didn't really go as much to their favorite previous spots like Thailand and Cambodia and Vietnam. Singapore did okay, and that was a kind of big puzzle. Why? And I don't know whether you saw these two movies, but this is partially why. So the first one is available on Netflix, Lost in the Stars. Both are billion-dollar blockbusters in China, but essentially it paints a picture of a couple coming to a fictitious island that looks a bit like Phuket, and essentially the wife gets abducted. The second one, the Cambodian government is very upset because it shows about the slave camps, where they're caught, kidnapped, and forced to make calls. Should catch it. But basically, it painted a very negative picture of ASEAN, which affected the tourist numbers. So even some of the rankings for perception of safety in Thailand, has gone all the way down to the level of Kenya, just to give a sense. The other point is the import growth for China. You can see that it's starting to bottom out, but hardly very strong on a total basis. But China is now trading a lot more with ASEAN than Europe and the US. I guess just to wrap it up, the big unknown, the known unknown is the presidential elections. But all the polls are showing that Trump leads by quite a big margin, and Americans seems to think that Trump will do a better job on Biden than on economy, on migration, on national security, on the Israel conflict. So it's going to be a big tough job for Biden to fight back. So what happens if Trump really wins? One of the stuff that he's come out to say is that he's going to impose a 10% blanket import tariff across the rest of the world. So the average import tariff currently is 3%. If he does a 10%, essentially a tripling. So that's going to be pretty painful. And maybe China doesn't mind that much because China already has an average tariff rate of 20% being imposed. But it does beg the question, will the MNC still come and invest here? Or will they go back home and maybe to Canada or Mexico where there's a free trade agreement? There are also stuff like, if you retaliate, I'm going to retaliate the same amount. So I put a 10, if you put another 10, I'm going to hit you with a 20%. They're also probably going to withdraw support for Ukraine, and also Trump is less committal on Taiwan and South China Seas. Trump also doesn't believe in climate change, so some of the policies that Biden has imposed for EV vehicles and all that will all be gone. So all said and done, that looks pretty a big, substantial shift and a shock that I think we just have to watch out. The other thing is just that when Trump does all these policies, actually the dollar strengthens, because of the relative price shock that favors U.S. goods. And the consensus call is for the dollar to weaken in the second half. So it's something you just have to be mindful of. Thanks. I'll stop there. Thank you.
Thank you very much, Harvey. Thank you so much for sharing. Now let's have Thilan. Thilan will deliver our market outlook. Thanks.
Okay. Good morning. Come on, guys. It's the year of the dragon. Good morning. All right. Much, much better. Now, a couple of days ago, I was at another event like this. An investor came to me and he said, Thilan, how do you make money from the Singapore market? You know, I heard some smiles there. He said, US market, you buy the Magnificent Seven, sure make money. Right? And I said, hold on. So you says that you picked 7 stocks out of 500 in the S&P 500. He said, yeah, the Magnificent Seven. And you think that these stocks are going to go up. Why? He said, oh, because, they have balance sheets, they have a lot of cash in their balance sheets, AI. So I said, so you have conviction in these stocks going up? He said, yeah, I have conviction in these 7 stocks. So I said, now you know how to make money in the Singapore market. Because you have to pick the right stocks that you have conviction in. Ladies and gentlemen, we are in a time which is very different. We are in an investment climate where interest rates are high, geopolitical uncertainty is high, and overall global markets uncertainty is high. In the last 10 years was an anomaly, where interest rates were low and uncertainty was low. History, for most part, has been times like this. And the investors who have made money are the investors who picked the right stocks and stuck with them and had conviction. So that's what I'm going to talk about today. I'm going to talk about stocks that we have conviction. And we have 10 names, so, wait till the end. But let me start off by showing you these 2 slides. So the left-hand slide shows some of the GLCs for Singapore, right? For most of their history, they've been very boring companies. Your Keppel, Sembcorp, CapitaLand. They've done nothing, right? Apart from giving you a bit of dividends, right? But something's changed in 2020. They started restructuring. They started to get rid of businesses that that weren't making money. They were looking to improve their ROICs, return on invested capital, and you start to see those stocks outperform. So right stocks, right time, 15% outperformance against STI. The right-hand chart shows what we call opportunity plus stocks in Maybank. These are stocks that our analysts really go through with a fine-tooth comb, and then they only give the label of opportunity plus when they have conviction. So again, right stock with conviction. And they have outperformed by 28% against the STI. So when people say you cannot make money in Singapore, I show them these charts, right? So it's all about doing your homework, listening to experts, and then finding the right stocks and sticking with them. So let's start talking about Singapore. I know I don't have a lot of time. Last year, the STI was flat, which is slightly better performance than some of the markets like Malaysia and Thailand. But generally, it underperformed North Asia, Japan, Taiwan, as well as the US and India. This year, out of the gate, hasn't been that great. A lot of interest rate sensitive sectors have underperformed the REITs, the banks, after a fairly strong December, where there was expectation the US will cut interest rates a bit early. And as Hagbin said, we don't think that will happen, and that's starting to reflect there. And if you look at investor behavior last year, and you can see the black lines are the institutional investors and the yellow lines are the retail investors. Institutional investors have generally been selling out of the Singapore market, especially the big cap sectors like the banks and the REITs. And the retail investors have also not been very, very active. For every dollar of institutional selling, retailers have only been buying about 77 cents. But this is what really excites me about Singapore in this dragon year. The left-hand chart shows Singapore market's price to earnings against the S&P. It is at the lowest it has been. The discount is the lowest it has been since the global financial crisis. There's no uncertainty around balance sheets and companies going under right now. There's no global financial crisis, right? And you can see that from the right-hand chart, where of all the companies that are listed in the Singapore Exchange, 40% of them actually have net cash balance sheets. So they don't even have debt. So the companies are strong, but the markets are pricing in a financial crisis. So, and if you look at every single time this line has hit this low, it has rebounded very, very quickly. So Singapore market right now, even from valuation point of view, is trading at significant discounts to where it has traded in the past. Looks very attractive. So what do we do? So one of the things that we track and that you can see on the left-hand chart, and you can look at the little gray line, gray bar on there, and that basically shows how our analysts are downgrading earnings. So whether they have confidence in the forecast that they're making. And if you look at the third quarter results, the downgrades were only around 7.5%, which means that a lot of uncertainty around inflation, interest rates have already been put into their forecast. So this means that we are at a minimum looking at about a 3% growth for the overall market in terms of earnings going into this year. And if you actually look at the small and mid-cap companies, which is the black line, we're actually looking at about a 5% growth. So we are having a market that is delivering growth, and we actually think this is actually at the lower end because we think there are multiple catalysts that will actually drive growth higher this year. In the near term, if interest rates do get cut, that'll have a very strong boost for the market. We are also starting to see the semiconductor cycle coming back. If you've been following TSMC's results, they had a record-breaking result. So I think for a lot of Singapore technology companies, this is good news. We are also seeing a lot more orders coming through for things like offshore and marine. You've seen the oil prices, as well as for green energy and sustainable businesses. And also a lot more tourists coming to Singapore. But what actually excites me even more is the fact that there is going to be 4 major drivers for Singapore over the next 2 to 3 years. That's going to fundamentally change how this market's earnings and valuations are going to stand. And the first one is what I just talked about, which is a lot of the GLCs as well as large corporates restructuring. So a lot of companies are starting to see that how they did business before 2020 is not the same way they should be doing business today. So with that, a lot of them are getting rid of businesses that are not making returns for them, selling assets that are latent, and we've seen that with Singtel, we saw that with CapitaLand, we saw that with Keppel, we saw that with Sembcorp Industries with the creation of Cetrium. And you see that the market has been rewarding them for that. The second is the theme of sustainability. I know a lot of people go, oh, sustainability, I can't use straws anymore. But the reality is $500 billion of institutional money goes into sustainable investments every year. That's the same amount as the US Inflation Reduction Act, which is part of what's keeping the US market going at this stage. And Singapore is going to be one of the key beneficiaries, simply because a lot of our companies here have some of the lowest sustainable risks. The third is a lot of Singaporean companies, especially the mid-cap and the small-cap companies, are venturing outside Singapore. They're buying growth because Singapore growth is slow. And they can do that because the Sing dollar is high. I'm sure a lot of you have been going to Malaysia and you've been enjoying that too. And valuations are cheap. The last 2 years of deals that have been happening outside Singapore from Singaporean companies has been about 21% higher than the 3 years before that. And then finally, AI. I know there's a lot of buzz around it, but I'm actually a firm believer that with AI, you're going to see new revenues as well as new efficiencies coming through. And you can already see that with the Singapore banks. Revenue per employee in the Singapore banks have been increasing. And part of this is because they've actually been one of the earliest to adopt AI and technology. So over the next 2 to 3 years, I think there is significant amount of opportunity in this market to look at. And that's how we've kind of got our STI target, which is 3,290, which is about 5% up from where it is today. But it also means that from a stock picking strategy, there are quite a bit of opportunities. I'm not going to go into the individual stocks. I'm just going to put this up there. If you want this presentation slide, please reach out to your salesperson and they will send it to you. Generally, in terms of sectors, we are quite positive on gaming, we're positive on the industrials, we're positive on internet, as well as we are getting positive on the REITs and some of the services and transport sector like ComfortDelGro and the technology companies and telecom. So I'm not going to, in the interest of time, I'm going to skip all this, but you can get your salesperson to send you the slides and go to the top 10 stocks that we think are going to make you money this year. And I know you're going, I wish before I can hear, I can get these top 10 stocks from Maybank every week if I can. I wish I can find out when they upgrade a stock, downgrade a stock, and I wish I can listen to Thilan every week if I can, right? You can. Now take your phones out. Take your phones out, scan this QR code. You can join our Market Mondays webinar, which is completely free, even if you're a client or not, and you have a live show where we will be sharing our top stocks to buy, top sells, as well as some of the key developments in the market. Please do join it. As I said, completely free, and this is a great opportunity for you to interact with all our analysts. I'll keep this QR code up later on as well. And here we go. These are our top 10 picks. We have a mix of large caps and small caps. And how we've kind of come up with this is, again, conviction. These are the names that our analysts are standing behind because they believe that there is significant opportunity in these stocks. Part of these are based on the themes that I talked about, restructuring, sustainability, M&A, and so on and so forth. And also laggards, stocks that lagged last year because of higher interest rates, higher inflation. Now they're coming back. So ComfortDelGro, DBS, Dynamax, Singtel, a lot of opportunities with restructuring. We have CapitaLand, Ascendas REIT, CICT, as well as LREIT on the REIT sector as interest rates start to come down. We have some tech names like Venture and Franken, as well as Genting Singapore, who will benefit from overall tourist arrivals. Now, with that, I'm around after this, so I'm going to put the Q&A. If you have questions, please scan this QR code, and you can send questions to me and Hak Bin, as well as to Master Ken as well, and then we will take those questions right after this. Thank you.
Thank you, Thilan. Now I'd like to open the floor for Q&A. Can I have Dr. Chua Hak Bin back on stage, please? Thilan? So audience, if you have any questions for Hak Bin or for Thilan, please scan the QR code and key in your question.
Okay, while we are waiting for questions, maybe Hak Bin, I'll ask you a quick question. I don't see any questions on queue at the moment, but let me ask you, we've got the Singapore budget coming up relatively soon. And, we've seen some pretty generous budgets over the last couple of years, especially during COVID and so on. And now we've still got fairly high inflation in Singapore and so on. Do you, without going into a lot of specifics, do you think that we will still see a fairly generous budget?
Well, I think all the signs are there for a pretty generous budget. PM has already said that there'll be a modular package, I think roughly about 8 billion. There's going to up the GST offset assurance package. Currently in the past budget was 9 over billion, but it looks like it's possibly going to 11, 12 billion. So where's the money coming from? Actually, I'm kind of stunned at the numbers when I see the tax collection. So for example, corporate tax revenue for the 7 months of the year, from April to November, Those are all released now. It's up 27% year on year. I think the government was only looking at 8 to 9%. Personal income tax collection is up 15, 16%. Again, the government was looking at a single digit. GST kind of is in line. But yeah, it's quite remarkable. And I think it's kind of confounded them because the economy was only growing 1.2% last year. So why the big jump? It's quite remarkable. So anyway, so the government's in a pretty comfortable position in the sense that it can extend more help. But I think this year, from what I gather, there'll be a tilt towards helping a bit more and trying to lift growth. I think the government's not that happy about the growth rates last year, so there'll be possibly some support for the corporate side. I mean, every year has been about social cohesion and support for lower income households, and that amount has been beefed up. But I think there also should be something for the corporates. So I think there'll be some co-funding schemes to help tide over some of the rising labor costs, and because there are schemes now to raise the labor wages for certain sectors by quite a bit, progressive wage model and so on. And also I think there'll be incentives to help this climate transition. Singapore's going to buy a lot of renewable energy. I think DPM Lawrence Wong equates renewable energy to the new water, right? Currently, only about 3% of Singapore's energy is actually renewable, and he wants to get it to about 30%. So there'll be big incentives, I think, thrown in for some of this bigger infrastructure that is required to import the renewable energy. So as you know, we're starting to buy from Vietnam, Malaysia, Indonesia, possibly as far as Sarawak as well. And I hope there are no more new taxes because I think the wealth taxes has already gone up by quite a bit on different fronts. From the property tax, and I think the carbon taxes. I think we're kind of comfortable. Singapore's pretty aggressive already, so I don't expect that to do any more adjustment on that side. Yeah, but again, there'll be the usual handout just in case it's an election year this year.
Thanks, Hak Bin. So we've got a few questions coming in. There's a few. I'm just going to combine a few. There's quite a few asking: is it time for Singapore REITs? Is this the time to buy? We've got our REITs analyst Krishna Goha right at the back, so you can catch him to get a much more detailed view. But I think, in general, I think it is time to buy some of the larger cap REITs. I think there is opportunity there. Especially with interest rates coming off. A lot of them have actually structured their balance sheets and things like that. So there is that potential happening. So I think, dividend yields are also holding up quite well. So there is attractiveness in the sector. As I said, we've got CapitaLand, Ascendas REIT, CICT, as well as L-REIT in our top picks. That kind of shows how we are kind of positioning for this year as well. So there is positive in the REIT sector, but you still need to kind of watch out for some of the dilutive effects, especially if they look to buy some growth. And especially the ones which have slightly higher gearing because they need to kind of restructure their balance sheet. So that's something to kind of watch out for. There's quite a few requests for the slide packs. So as I said, you can get the slide packs. Please just speak to your salespeople for that. Unfortunately, I don't think, because you're kind of running on time, we'll stop the Q&A there. And please, you can catch us after this session and hand over back to Esther.
Thank you so much. Thank you, Thilan. Thank you, Hak Bin. So we've come to another very exciting part of the segment today. We have Master Ken Koh. Master Ken Koh is a consultant at the House of Fengshui. Today's segment, he will deliver the Feng Shui outlook for the Wood Dragon year. Master Ken Koh, please.
I think I'll stick to this. Good morning, Adia. Good morning, Yang Lim, Alexander, Thilan, of course, Dr. Chua. I want to assure Dr. Chua is in a good position despite the outcome, despite our forecast. First and foremost, I want to welcome you to this segment on the Dragon Year. The Dragon Year, of course, That's very fascinating. In the first place, you realize that dragon is the only imaginary icon in the 12 animal sign of the Chinese calendar. Yeah, the rest of which are actually real animals. And this is the year of the wood dragon. I want to ask you a question. When do you think the wood dragon actually comes in? Is it the 1st of January? Is it the 4th of February? Or is it on Chinese New Year on the 10th of February? Wow, very well informed, yeah? 4th of February, which means that the year of the dragon actually happens before the Chinese New Year. And culturally speaking, they have this saying, well, then it means that there's no spring in the Chinese New Year of 2024. As a result, it's not going to be a good year. Well, it is just coincidence, because we're going to get into more details as to how we're going to assess this. Yeah. In the first place, the wood dragon year, and how do we, as a Fengshui master or consultant, actually tell you or predict sort of what's going to happen to the year, your individual zodiac forecast, which you will be very interested in. It must point to the same thing, yeah? Whatever the methods are, if it is good, it is good. If it is not so great, then I'll tell you how to manage it. That's the most important thing. I can't twist the fact, yeah? So, amongst them, this is one of the things that we will look into. This is what we call the chart of the year. And if you could, just take a snap of that QR code, because it's going to lead you into what we call the plotting of your own chart. It is important as we get along. You understand a lot more, and there are very interesting things within your chart that we're going to explain to you. Now, I color-coded it. On the right-hand side, what you see is, well, there's a couple of green, a couple of beige colors, a patch of red there, and then you've got a gray color. You'll notice one thing. The description on the top 8 boxes up there is all in yang energies. Now, there's a polarity of the energies in Feng Shui. It's between the yin and the yang. What is yin and what is yang? Yin basically is on the quiet side. Yang energies is basically on the more aggressive side. So what do you expect? You'd expect that this year, the sentiments of the year itself is a little bit more aggressive. When I say more aggressive, it's not meant to be focused on the one individual. We're talking about the whole sentiments around and amongst the people. Yeah. But secondly, of course, there is in your chart again, as with the year's chart, this thing called the profile. Profile basically also tells us how people are going to react within the year and how they're going to handle things. And interestingly, there's this name called 7 Killings Profile. Doesn't sound so friendly. But the 7 Killings Profile simply means that is a feeling of dominance. It's a feeling of, rights. Yeah. And when it comes to wealth matters, of course, water relates to the wealth within the year itself, not necessarily for all the years, yeah? It is just unique to this chart, yeah? When it's unique to this chart, then you see that the water that is colored blue is basically at the bottom. At the bottom of it, which we, in Feng Shui terminology, would say that it's kind of a hidden wealth. Hidden wealth means basically you got to dig it up, yeah? So digging up means, yeah, you've got to have a lot of patience and a lot of wisdom. Wisdom should come from your salespeople over here. And again, from the chart again, clashes and combinations, which we can see. Yeah. So there are a lot of combinations or clashes, and then this then will relate to unstable kind of relations. All these are not manifestations of what we see. In fact, I've been talking about this to a lot of corporate clients about 6 months ago. On the left-hand side, you'll see a couple of things. Notably, you will see the second line is called noble people. whether or not you have the noble people, it's in your chart. If you have it, it's good. Simply means that, well, there'll be helping hands in your life, which is very useful. Of course, there's this, you see the love icon over there? Peach blossom. That's a misunderstood star, I must say. Yeah, ladies especially is very interested in this star. Most ladies think that, oh, I've got a peach blossom star, I'm going to attract all the men. Nope, you're going to attract the men, women, young, old, cats, dogs, everything. Yeah, this is called likability star. It simply means that you've got this kind of you radiate something that is, making things people deal easier with you. That's a likability star. Yeah. With Sky Horse, if you have in you, then things move fast. Better for you to travel. Yep. This is in general for the year. We also want to touch upon this thing. In terms of environment, in Feng Shui terms, we also look at the composition of the chart, and it tells us quite a bit of things, which will basically be a little bit of wisdom if we are traveling. Yeah, environmentally speaking, because it is laden with earth. Earth basically means the dragon year is elementally speaking earth. Yeah. What clashes the dragon is actually in the zodiac system, this zodiac called the dog. The dog is also earth. And so when a clash happens, we are talking and looking at earth movements. Earth movements, I will just come to you and speak it direct to you, earthquakes. Yeah, and it's happened earlier than we think. Especially in the month of April, month of August, and month of October. Again, it relates to things that is, in the zodiac system. April is the month of the dragon. So if a dragon and dragon clash, that's two earth clashing. Yeah. When comes to August, the chart is such that it takes away the monkey in the chart, and then the two earth also collides. Yeah. And in the month of October, of course, yes, it's a dog and dragon clash. Water incidents, extreme cold, you've seen it, January 2024, January of 2025 is coming. Unfortunately, it's not all cold, there's going to be heat as well. Somewhere in June, economy-wise, we are looking at an uptick. In fact, I actually said it as last year here. What we're seeing is actually a very, very quick V-curve recovery somewhere towards the end of the year. So I'm pretty optimistic, and I think I resonate with Dr. Chua and Thilan's figures out there. I think there are a lot of reasons for us to be optimistic for the upcoming couple of years, which I'll share with you very soon. Yeah, behavior-wise, I think is very important. We need to know the general behavior of people, meaning to say we need to know how people are going to act and react towards us. And this year, from the chart again, we're looking at unreasonable behavior. I don't want to go into details, but you have seen it. Yeah. 2024 is a very unique year, and some of you who are into Feng Shui, you've done your internet searches and all this kind of stuff, you know that there is a thing called a period 9. This is what we call the major shift of energy. In terms of elements, it is related to fire. Fire element always brings about activities, especially related to economics. Once again, when we do Feng Shui, what we're doing is we are actually relying on, I like to use the word big data, because we bring ourselves back 60 years ago in the cycle. When it is in the cycle, we look at it from the point of view where it is 60 years ago, and it also was the year of the wood dragon. What was happening then becomes quite a template that will unfold in 2024. Now, interestingly, some things will change. Not everything is static. Who are the people in charge? Gen Z. Gen Z will be people in the early 20s today. in 10 years' time, which is still within this period 9 cycle, the behavior of people, of the decision makers, the policy drivers perhaps, the things that we are going to be affected by are to be related with Gen Z. What are their behavior? Well, their attitudes of sharing purposes, transparency, and transient ownership. People are going to be, well, kind of not so fixed on the possessions. Now, if I were to bring you back onto the chart here, on the left-hand side, you see that there is a sequence of numbers, 891, all right? That's a period. In the period 8, for example, because it's an earth element, the property and the real estate sector was actually quite a non-brainer. In other words, you're seeing it. I was at one of the developers' event just last night, and they were asking me one question, all right? And the question was, is it still good to buy a property? I say, buy. Yep, buy. Why? Simple. If you think that the period 9, which is the next 20 years, is going to tail down or tail off when it comes to growth of properties, you'll be very wrong. Why? Because the fire element is a strong support and pillar for the earth element, which is related to real estate. Matter of fact is, from numbers alone in Singapore, okay, I will not touch things that is outside of Singapore as it is now, yeah. The capital growth for properties for the next 20 years may outstrip the last 20. I know it's unimaginable, I know, yeah, but I've seen it. Why? Because I've been doing this kind of talks for the last 15 years. 15 years ago, I told people, hey, look, buy a property. I say, oh, no, it's about 800 PSF, the kind of thing. I say, no, just buy. Why? Because the numbers is just supporting it. Yeah. How so? Very simple. The biggest developer in Singapore is actually HDB. Yeah. And how many flats do you think they produce? If it is 25,000 is in the headlines. 25,000 a year. Plus the developers. There will be 36 new new development in 2024, averaging another 15,000. By the year 2030, which is about 7 years from today, 6-7 years from today, we're going to have about 7 million people to use our infrastructure here. Where are they going to stay? We're not talking about just the new people coming in. We're talking about upgraders. We're also talking about the new entrants, people, the young people, Gen Z who is actually making all these kind of decisions. Yeah. So it's fairly important to understand that if it is about investments, if it is about anything that is making your money grow, well, yep, as Thilan put it, now is the time. Now is the time, really. Yeah. So let's dive into this zodiac sign, which you are all kind of waiting for. First stop first. This is being the dragon year. I'll touch upon the dragon. Quite unlike matters of finance and accounting and even stocks, in our presentation, red is good, gray is not so good. So you see the ratings, it's good. Yeah. What have we got here? For the dragon, because you are given the baton. You're given the baton to be the ruler of the year. Because you're a dragon means you're a ruler of this year. Yeah. The best thing that I advise you is you're going to get a lot of recognition, and as a result of that, take some kind of responsibilities. Take some kind of leadership roles. Yeah. The bolder you are, the better it is the resultant for you. And of course, there's this golden carriage star. Golden carriage basically means it's wealth-related opportunities. Now, good stars are good stars. What I'm trying to tell you is later on you see that, for example, people who are born in the year of ox are in good time. All right? Lots of wealth stars. It doesn't mean that you're going to fire your boss today and then wait for money to drop from the skies. No, it won't happen. You got to actualize it. Conversely, for all the negative stars, you must manage it. Now, so this is a wisdom that you're going to move forward in 2024. Yeah. What's so bad about 2024 dragons? Well, sword edge, a little bit of competition. Who doesn't have? Everybody has competition, of course. Then there is this thing called hidden corpse. Okay, in Feng Shui terms, these are all namesake, please. Hidden corpse doesn't mean you're going to see some dead bodies in a house and all this kind of stuff. Not at all, not one bit. Hidden corpse basically means there will be some kind of a, discovery, some kind of disclosure. What kind of disclosures? Well, guys, the history of your past girlfriend's going to surface this year. That's all. Not terribly bad. Okay. What about the monkey? Monkey this year? Well, the word is be patient. Patience is the word. But unfortunately, how patient can one get in 12 months? Correct or not? So I'll tell you this. Well, ratings-wise, it's about average. What do you get? 3 stages means things, if you were to look into progress or success, that's very sequential. So you're going to take one thing at a time for monkeys. Now, but then, if you're not patient enough, what's wrong with short-circuiting the system? Yeah? And what do? Well, go and borrow the luck of the rat. But please be discreet. Don't go around the office and ask people, are you a pig, are you a rat, are you a dog? That's not the way. I don't encourage that. Yeah, be discreet, please. Yeah. Let's move on to why we think the rat is popular. The rat is popular because there are people in charge. And this year, there's a lot of charisma. Lots of charisma in people who are born a year of the rat. Yeah. People born a year of rat this year is best. One of the best advice I'll give you is collaborate. When I say collaborate, it simply means that, you leverage on somebody bigger than you. Yeah. And of course, it depends on your ambitions, on your directions. It depends very much. For some people, they just don't want to do too much. Yeah. But if you are into something of a career climb, you're something of your business, you're managing it well, do some collaborations with the big brands, and that will bring you some mileage, I'll say. Because there's this white tiger means there's some kind of physical exposure to harm. Good advice for rats would be stay away from conflicts. Stay away. Yeah. A little bit of frustration here and there. Yep, that should be okay. And of course, there's also one thing about people who are born here red. Yeah. Somewhere in October, please try and avoid the open seas, open oceans. Yeah. So I've got customers who actually would start telling me, we're having a wedding party kind of thing next year. I say, when? He says, it's around about year end. I say, where? He says, Bali. I say, can you change that? I say, try. Now, by this time, you would have heard about it, and it's very, very cultural here. Yeah, very cultural, because we grew up with this thing called Fan Tai Shui. Okay, the English translation is offending the Grand Duke. Quite a mouthful. Offending the Grand Duke. What does it mean? It means that every year there's a rotation of zodiac. A rotation whereby you're said to offend the ruling year. All right? And for some of us who are in my age band, I'm pushing 64, so we all know. When we Fan Tai Shui, my mother would tell me, please run to the temple and pray. You pray for what? Don't ask. This is good for you. This is good for you. Just go. After coming out of the temple, I don't know what I'm praying for. That's a problem. So I got to demystify a little bit of things here. Yeah. The description is up there. First, the 4 of this zodiac that is affected. The top one is actually dog. Yeah? Somebody told me it's a tiger. I don't know which part looks like a tiger. It's a dog. It's a dog. a dog, the dragon, the ox, and the rabbit. And you manage these things. What does it mean when you are in this category of this 4 zodiac in your chart? Simply means that you must anticipate changes. That's it. A little bit of discomfort. That's all. What do you do specifically? I've described it there. Just manage it. Yeah. So as I mentioned to you, every zodiac sign will come with positive stars and negative stars. Yeah. And the only positive star that the rabbit has is called no positive star. I'm sorry, I can't put in something good because I can't manufacture it. I can't manufacture it. What is simply points? Okay, look, rabbits, don't, please, don't because of this, don't fire a boss because opportunities are not there. Okay, now seriously, there is this good blade thing. Good blade simply means, in Chinese it's called 阳刃. Good blade simply means you feel victimized all the time. You just feel that people are against you. You just feel that people are just taking advantage of you. You just feel that people are making a scapegoat out of you. In 3 instances, I use the word feel because it's a matter of feeling. That's all. It is just a matter of feeling. Remember this, all right? And then there's a sickness charm because, you don't feel good. Certainly, sickness will follow. That's unfortunate. So, point is, what do you need to do? I tell you this. If you've got problems to solve, all right, and you need to solve it fast, go and borrow the luck of the pig. Our pig this year has got these wonderful, powerful stars. So, in Chinese philosophy over here, a little bit of feng shui wisdom over here, it's okay to borrow luck from other people. It's okay. And they'll be very happy to give it to you if they got plenty of it. Trust me. Yeah? So, if you need some kind of protection, what kind of protection you may need? Well, you feel victimized. You think that, there's politics here and there. You're being taken advantage of. Well, go under the wings of the goat. That's all right? Watch out in April and October, of course, and focus on your health. I think that is the most important thing. Now, in spite of this kind of a bleak forecast for people who are born in your rabbit this year, you must look into your charts because you may not just have the rabbit. Yeah, you may have 3 other zodiac signs which will affect you in different parts of your life and make good. As I mentioned to you, if you don't manage it, things will manifest. If you manage it well, you can control it. Yeah, that's what it means. Snake this year. Snake this year has got this nice little star called the sky happiness. I tell you what, sky happiness. Celebrations, happy occasions. All right, what does it mean? The more you celebrate, the more vibes you have. In the company of happy people, the better you get, the more successful you are. So, easy advice for you, yeah? Attend birthday parties, attend ceremonies, attend graduations. Even if you're not invited for wedding dinners, gate crashing. Yeah, just be in a company of happy people. That's what it means, seriously. Yeah? So like I said, all these are big data. I mean, look, I may make a little bit of a joke out of here, but seriously, this is what it is all about. Yeah, Chinese metaphysics in feng shui is such a dry subject. Come on, let's lighten it. Yeah, I've been speaking for what 20 years, and people ask me, aren't you not sick of saying the same thing? I say, no, it's not the same thing. It's a different audience all the time. So yeah. Remember, just keep a happy face, be happy. Snakes this year is not so bad. Yeah, if you're talking about money, I think it's all there. You talk about work, it's still there, it's good. Yeah. Now, one more good star over there is a sun star. Sun star, what does it mean? It's a nobleman star. What is a nobleman star? Somebody who is of some kind of authority, who is of some kind of ability or higher capacity, comes and offers help to you. Good advice, don't turn a prospect into a suspect. Yep. Don't always be suspicious. Somebody comes to you and says, hey, I'm going to help you, And then, you turn in your mind, oh, this fellow is up to no good. He's got an agenda. No, please don't do that. You know that you're born, you're a snake. Please be open to such helping hands. Important. Yeah. And then, of course, you've got the robbery star. Robbery star basically means even if you're not born, you're a snake. All right? If you've got a son, you've got a wife, you've got a husband, well, I tell you this, there's some money loss because of a robbery star. The robbery star doesn't mean that a robber comes to your house. No need to come. They do it online. So beware scams. This year, beware scams. Okay, let's go to the superstar. Wow. It's a lot. And so the life of the ox this year is going to get complicated. I'm telling you first. Now, a lot of prosperity stars and the financial linked stars are with the ox this year. Yeah, what does it mean? It simply means that you cannot just sit at home and do nothing. You got to work towards, I have to use the acronym here, OPM. What is OPM? Other people's money. You got to work for it. Yeah. And of course, you got to prepare for recognition. There's got a lot of recognition. You just make good use of it. Now, then you've got to understand that there is this thing called the yin killing. All right, the yin killing is called in Chinese yin sa. Yin is representative of female. So I put it simply, troubles from females. So, especially those who are born in your ox, and guys, listen up. Please don't offend females in 2024. Sorry, I retract that. Please don't offend females forever in your life. You're going to have a hard life. Okay? All right, now, besides this kind of zodiac, I always want to touch upon something that you can do. What are we doing over here in the zodiac forecast and prediction? Basically, I'm telling you that, these are the influences that you cannot control that is going to come to you for this year. Now that you know it, you better know how to handle it. You're in better possession. But where do the solutions of good feng shui comes in? It's actually in your house or your office. Yeah? So, I think Thilan actually had some wisdom, and then he moved the water cooler nearer to his desk. I think it's working. Here it is. What do? You need to know the directions of your house. Yeah? Directions of the house is very important. How do you get the direction of the house? Go to the center of the house with a compass. Where do you buy the compass? No need to buy it, it's in your phone. Okay? Where do you point? No need to point anywhere. It will tell you north, south, east, west, and orientation will be there. All right. Don't know how to take direction? Ask your husband. Husband irritated? Ask your son. Only after all fails, then you come to me. All right. I want to bring your attention to two very important things. The negative ones first. Do you see it's colored the west in yellow? That one is called the misfortune star. Misfortune star. Now, this is a star that is not to take lightly. All right? Every house will have this, by the way. Yeah, it doesn't mean that it's a GCB and you don't have it. No. Every house has it. Okay. Just in case, I say just in case, you plot out a chart very nicely, and then that particular room is a guest room. How? Or somebody's room, somebody sleeping inside. Please don't try it, all right? Because seriously, it is very difficult to recover, especially when one is sick inside, all right? And I know there are skeptics. How can it be so simplistic? Okay? If you've got a room that is in the west, don't try it yourself. Ask your mother-in-law to try it. No, please. Don't be so cruel. Just invite your daughter's boyfriend to stay a night there and see what happens. Just joking. Anyway, I got to give you the solution and things not to do first. Yeah, in the west part of the house, whether or not it's a room or is on the outside, don't burn things because it is earth in nature. When you burn things, the fire is going to fuel up this earth energy, and it's very serious. Okay, naturally, you have to give some kind of a solution to this. So what do? Because it is earth, we need to use the element called metal. So I don't promote things such as dragon, for you to sleep with snakes under your bed and all these kind of things. No need to. Metal, isn't it? Go to Decathlon and buy dumbbell. Yeah. It must be all metal. Yeah. So this is what, because you can shift it around every year, as long as you know this chart. And this chart is very, very, very easily available on the internet. Yeah, you can't go wrong. So remember, misfortune star the same it is for the sickness star, which is in the southeast. On everybody's lips is where to activate for wealth. Southwest. Can you see that teardrop there? That is water. All right. So water basically means you go and buy a fish tank with pump, light, and filter. All right. I don't need the fish, just the water. Put it there. Yep. Activate it. That's what it means. Simple. Yep. And the rest, of course, you guys read it. What about tiger? Tiger is the sky horse. Sky horse this year is, for those who are born here, a tiger this year, travel as much as possible. As much as possible. That's what it is. One thing, sky cry. Guys, listen up. If you've got a girlfriend, a daughter, or a wife who is born here, a tiger, chances are, out of nothing, she'll burst into tears because of sky cry. You are. Because the sky cry creates this emotional upheaval. Yeah, so it could be a picture, it could be a song, it could be a movie. She'll just burst into tears. So please be understanding. Let's come to Dr. Chua's concern. Okay, now, there's one thing over here. What happened is, for the goodness of the horse, I want to allay your fears because there's this relief stars. Relief stars are very important because it tells us that it's going to solve problems through some kind of, ways that you can't explain it. Yeah, so that's a good thing to have. But of course, you've got to look out for the red chamber. Red chamber means, kind of other people trying to attract you, sort of thing. Yeah, so it can get into a little bit of emotional convection over here if you're not careful. What do you need to do to take care of? There's this thing called funeral door. Funeral door basically means you are more kind of aligned to the negative energies. Yin qi. Yin qi basically means yin energies. Yin energies brings your sensitivity level up a couple of notches. So you begin to see things, hear things, feel things. Okay, now no harm will come to you. Don't worry about that. What about a goat this year? Yeah, somebody asked me. Goats are going to get very inspirational because of this moon star. Plus, the moon star is a female nobleman. Same with the male nobleman. The female nobleman basically means a female coming to you and offering you help. So, again, don't close your doors. That's important. Don't overcommit. That's important for people who are born in the year of the goat. Yeah, because if you overcommit and underdeliver, your reputation is going to take a hit. That's good advice for you. Because it's Chinese New Year, plan your leave over here. Plan your leave. Yeah, I've got good dates to start work after Chinese New Year. I've got good dates to stop work in about 2 weeks' time. You'll notice that the last day I put there is about 7th day of Chinese New Year on the 16th of February. Yeah, after 7 days of rest, you better get back to work, because if you don't feel like going back after 7 days of rest, then don't bother to go back. I think the job is not waiting for you anymore. Okay, I got to move quickly, yeah? This is called rooster. Please don't call yourself chicken. It's not chicken, it's rooster. Be proud of you. Be proud of yourself. The rooster has got this combination, yeah. So this combination is pretty interesting, yeah. Also, there's a peach blossom star. So for roosters this year, especially singles rooster is a good chance for you to attract, to commit, and to get married. I repeat, yeah, singles only. Married roosters cannot marry one more time. Yep, important. Then there's this small consumer. Small consumer means repeated spendings, which you are not aware of, and then it piles up. Yeah. Next thing, the dog. Dog this year, average. Just average. Yeah. But the relationships are very good. So national treasure means if there are people who are born here, you're a dog and you need a big audience, just go out there and grab the opportunities. Expand, for example, yeah, into social media. You're an influencer, you're heavy on social media, just do it. Go public, show your skills. That's what people appreciate you for. What would be the thing that is very important to note here on the negative side? Big consumer. Hey guys, any one of you who is born in the year of the dog, I will tell you, this year 2024, expect to spend a huge sum of money. If you don't spend it, you'll be scammed. So after this, hey, look. After this, please go and speak to your advisor. I park the money there. I'm not paid for this advertisement. Let's move on to the last one. All right, this last one is called the pig. And pig has got this emperor star. Yeah, so the emperor star basically tells you that you're in command, you're in charge. Whatever you say, people just got to follow. All right, and then there's this very good executions. Another thing is the red matchmaker. Red matchmaker is very good for relationships. So, you see a lot of relationship stars which are very, very, very different, yeah, over here. And for those who are born in the year of the pig, there's only one advice I need to give you. Please don't neglect your friends in your family, because if you're doing well and then you neglect them, these problems will then come back to you. Okay. Just before I go off, Chinese New Year is an opportunity for you to invite the God of Wealth. These are the dates. See, everybody is keen. By the way, I have again to demystify this, yeah? The God of Wealth is not this roly-poly guy. No. I tell you what it is. The God of Wealth is actually a star in the sky on a given date and time. That's all. So you've got 3 dates here. I want to touch upon 10th of February. 10th of February is Chinese New Year. All right? So what do you need to do? The reunion dinner is on the 9th. After dinner, please don't jump into bed. Wait until past midnight. What do you need to do? You must, if you want to connect to the God of Wealth, you must open your main door and your windows. Otherwise, you'll go to your neighbor. Second thing, you got to light up your house. Because if you're successful in inviting him in, he comes into your house, he trip and fall, he'll never come back. So remember this. Remember 10. And these are the 2 times. Yeah? Look into the southeast, southwest, or the northeast. Look. You will see a star. If you see it visually, what do you need to do? You need to connect. How to connect to the star? Wi-Fi. The star, the Wi-Fi. Just Wi-Fi. And then you make your wishes. I give you 1 hour. Oh, that's a lot of time to make a lot of wishes, all right? But please be careful what you wish for. Huh? Don't wish for anything else that is not so good for you, yeah? Okay? And of course, the same for 14th of February. So there's a lot of opportunities out there, this thing, which is very, very interesting. It's just Chinese New Year. It's just something. It's something that is culturally linked. It's non-religious. Anybody can practice it. Most people would do it, all right? And with this, I want to thank you guys. I want to thank Maybank for giving me this opportunity here. I really enjoy it. I really interact with you guys. And I wish you a very happy and prosperous Year of the Dragon. 新年快乐! Thank you.
Thank you, Master Ken. We're running a bit short of time, so now we have a quick Q&A. Can I invite Jerry, please? Jerry, our analyst, to be on stage as moderator.
Thanks, Esther. Okay, so we are running short of time, so I know that you want to ask some questions for Master Ken, but I think only 1 or 2 lucky audience will get to ask the question. So you all to raise your hand first. I'll count 3, 2, 1. The first person I see raise the hand will get to ask the first question. All right? Get ready, yeah? Don't get so kanjiang. Relax. Yeah? 3, 2, 1. Fast.
Okay, quick answer. That would be relating, the years will be relating to the years that people who are born in that zodiac. Even if you're not born in that year, there's a period of month in which that zodiac will fall into your month, and as well as the hour. That's the reason why I asked you to plot your parcel chart. When you have a parcel chart, you will actually tell. That's correct. That's correct.
Okay. Next one. 3. Relax. Yeah. 3, 2, 1. The last one.
Okay, I see that there are 2 different sets of about luck forecasts, right? One is the Fan Tai Sui part, and the other one is on the individual zodiac sign. So I see that Ox is Fan Tai Sui, right? But at the same time, it has very good. Which one is the more dominating factor?
As I mentioned to you, all the stars are just influences, all right? Which means that if you work on the good ones, that one will precede. So go for the 12 stars. And then the Fan Tai Shui thing will basically cool down. Yeah, that's like that. It's a simple game of numbers. Work on the positive stars. That's my word for you. All right? Your question, sir.
Hi, Master.
Hey.
You see, this dragon year in Chinese calendar is called a Mang Lian, right? Mang Lian is not good. And also in Western calendar is also called a leap year. The leap year is also not good.
Right.
So what misfortune or calamities you will see in 2024?
Okay, so as I mentioned to you, we do not take just one filler. We do not take just one instance to actually forecast this. We take it back, 60 years, and it's big data. So if you ask me about calamities, well, basically, as I've mentioned it to you, based on more than one source of prediction and forecast, we're looking at earthquakes, we're looking at tsunamis, we're looking at, especially for those of you who are going mountain skiing, all right? Just be a little bit careful in a couple of months, April, August, and October. Yeah. That's what it is. Yeah, and for those, I'm going to be around for a while, and those of you who want to approach me for personal questions, you can always ask me. Yeah, sure.
Okay, I think I'll end off with the last question. Mr. Ken, you just mentioned about property, right? You're saying that
yes,
it's a buy, long-term buy, close-eye buy. But I'm just wondering, because I think a lot of us are also wondering that, in China, the property market is now at a very big discount, especially even property stocks. China and Singapore as well. So is it still a good time to buy now? Or do you think that What do you think?
There are two major parts, so I got to answer very carefully. Are you talking about physical property or stocks related?
Okay, both.
Both, huh? In physical form, I would say I'm very upbeat about Singapore. It's because of the numbers, because there is not enough supply. Yeah, I can't say the same for the short-term outlook or forecast for regional real estate. But if we look at it a little bit medium to long term, the period 9 is still a fire element. Somewhere soon, all these things will correct itself. Yep.
China? Because China already corrected.
Including, I would say including China. Including China. It will be all right. Yeah. There will come a time when things will stabilize. There will come a time when and if you give yourself 20 years, well, that's a long, time. But you know that what are the things that is kind of in favor of the fire element, and one of which is actually real estate still. Yep, still. Yep.
All right.
So I hope that answers your questions.
Yes, of course. Thank you, Master Ken. All right. Let's give you a round of applause.
Thank you.
We're going to go on to part 2 very soon. Okay, for those of you who are already seated, if you have your handphone with you, can you scan this QR code? It will take you to a survey form that will also lead to a Google review form. So if you complete both the survey and the Google review page, you receive a $10 shopping voucher today just for completing both the survey and the Google review form. So do note that the Google review is for one-time review only. At the same time, I'd like to mention that if you're new to Maybank Securities, we invite you to open an account with us today. You may approach any of our staff at the booth outside in the Maybank Polo Tee to help you to sign up. So all new sign-ups will receive 3 free trades. And on top of that, just for today, we are giving out $20 shopping voucher, as well as 6-month free SGX market debt. I encourage you to please sign up with us. Okay, so now let's proceed to a segment of presentations by our esteemed corporate presenters from our diverse sectors. So they will share updates on their corporate profile and business agendas. First and foremost, we have Dr. Louis Ooi, CEO of LMS Compliance Limited. Mr. Ooi, please.
Good morning, everyone. Having a very insightful feng shui talk just now. So I would like to thank Maybank and also GX organized this event that I can share my humble company called LMS to you. To some extent, we are doing some compliant and also ESG related stuff that actually related to feng shui as well. Okay. First and foremost, we are ASEAN's homegrown independent testing, certification, assurance, and also assessment service provider that has been accredited by Standard Malaysia and accounts abilities. So we have 2 accreditations. So one is Standard Malaysia. We do independent testing, assessment, and certification. Now we venture into assurance. Yeah? Assurance are related to all ESG sustainability stuff. We'll cover this later. At a quick glance, company was formed in 2006 in Malaysia, and we have 3 accredited independent labs. We can run more than 1,001 accredited tests. When you use the term accredited, means the results are automatically accepted by international importer and exporter and also government. So irrespective you are accredited in Singapore by SAC, that we are going to do that as well, or in Malaysia, Standard Malaysia, or any part of the world, as long as concerned you are accredited under ISO system, the result, your certification, your assurance are automatically accepted by the international client. We have about more than 120 client employee as per December 31st, 2022-23. And more than 80% of the revenue is actually repeated client. We do not have much on the order books. It depends on the regular client come in and send us a sample for testing. For example, sample from food, medical device, pharmaceutical products, and many, many more. The revenue increase is about 13.1% compared to first half of 22 and first half 23. The little bit small words downstairs there stated that our dividend policy is 20% as for 22, 23, and 24. However, in our first year, last year, distribution of the dividend is 60% of our total PAT. And in these 2-3, we're going to distribute the dividend not less than, it's more than 60% of our PAT this year. So it was translated to around 3% of the dividend yield, and with the around 4.018 is our earning per share, and then 0.0113 is a dividends payoff for 2023. That's expecting for the this year's. Okay, let's see the company. No mic, sir. Thank you. All right, thank you for the quick glance from our company on top of services that we have and also the sector that we serve right now. First and foremost, on the video result, we begin with the environmental sampling. The technician is actually drawing sample from the river. At the same time, our testing and assessment team consists of about 96.1% of our total revenue right now. And for the certification, we have people to do certification of system like 9001, food safety, HACCP, and so on. It consists of about 1.5% of our segment. Trading, we sell basically right now all our digital platform on the third column. All the digital column, digital platform or digital product is actually invented and also by us, designed and being coded by us to digitalize our entire laboratory flow. So with this, lastly, we are entering into the assurance, verification, and validation business. So a lot of people heard about E, S, and G. Yeah. So let me a little bit share about E and S and G. E is actually referring to our Earth. Yeah. We only have one home. We cannot migrate. We cannot afford to migrate to Mars, even though we know when to see the Tyson. Yeah. You look at it, it can do Wi-Fi, but don't go there. We only have one house, right? Number two, ESG, we are talking about S, social. I think social is probably a very important part for the, an organization cannot move, cannot make profit without good people like our employee. Hence, in order to get the company in the right track, we need governance. Yeah, governance to govern the board independent, board diversity are so important to make sure that CEO like me are not doing hanky-panky thing and ensure prosperity and minority shareholder wealth has been protected. So E, S, and G, and now we are summarized into a very important word called sustainability. If people ask you what is sustainability, you're talking about people, you're talking about planet, and also you're talking about prosperity together, right? That's a simple definition of mine. Align, like it or not, we are in this ESG enabler business services where we conduct a lot of testing related to environment such as noise, pollutions, air pollutions, and also carbon footprint, water pollution as well. This is under E category of ESG compliance requirement. For people, social, I'm a bit confused. A lot of people understand that, misinterpret that CSR is one of S. Yes, it's true, but CSR must be related to your community. Example, right now we are talking about product safety testing, like food safety testing, as impacting direct your client, your user. Hence, we also have a series of food-related testing for that purpose. For non-food related industry, you might send sample to or export your product to EU, US. You need to test for the REACH and ROCH compliant. That's also make sure that the product that you produce are not harmful to the environment. So another two places that actually position very well on the product perspective and direct impact on our direct user or client. Apart from that, as I mentioned to you, employee safety are also very important. It's under category S. Myself also a competent person for the OHS, Occupation Health Safety and Health competent person. We do carry out a lot of assessment in the shop floor to ensure that our employee working in a safe condition. Yeah, this is also another area of S. Lastly, this consists of about our 96.1% of revenue. For governance, we do have a lot of system which is like under ISO perspective, 37,001 anti-bribery, and also 27,001 information security management system, talking about PDP, you're talking about data protection, and also social audit under RBA, CDEC, SA8000, CIMITA, and many, many more under all ESG category. We are in the front line of ESG enable. We help company in Singapore, in ASEAN, to enable their ESG sustainability growth. This is a trading. As I mentioned to you initially, we do a lot of trading for our to complete the route of the supply chain to our client. Now we more focus on digitalizations, our digitalized products that actually can enable more on traceability of their product. In the corporate video, almost at end time, end of the period, we saw a client that scanned the QR code on the shelf, and then you can see the performance of your products, based on their product quality. This is actually consists of about 550 companies that are using this IC to ensure the product traceability. IZEN, we have about 16 enterprises that are using this document control, and also we have others users are using our platform. This is assurance. All the services that lay under ISO requirement to do assurance services like carbon footprint, like carbon reductions, and also product carbon footprint, and so on and so forth. So we are in here to actually assist our client to do ESG reporting as well, the sustainable reporting. Yeah. So quick glance, this is our growth, 2.3 H1 and 2.2 H2. You can see we have 13.1% growth, and most of it is from testing and assessment, and we foresee a very good demand and very good future for the sustainability or assurance business segment that we already started to help a couple of listed co in Singapore and Malaysia to do the sustainable reporting. The EBITDA growing at 8.8%, yeah, first half of 2.3 and first half of 2.2, and the net profit are maintaining at 2.7 millions, and basically we're going to release our year-end result, and we can double up the figure. Net margin are slightly slashed from 30% to 26%. Our net PAT margin, EBITDA is about 45 to 43, slightly drops. So to sum up, indeed, we are focusing the future for the company and looking toward the assurance services. As far as concerns, we cannot afford to lose our home. Yeah, reconnect to the island state of Singapore. I think climate change is one of the issue of current sustainability impact. Hence, I took an initiative to draft 70 pages of sustainability report for LMS last year, and it covered TCFD, climate change model, GRI, Global Reporting Index Standard Initiative, and also SASB. Now, I think this model has been consolidated into ISSB model, where it's more focused on single materiality risk assessment. However, personally, I still believe GRI is double materiality are more concerned, where you look at financial perspective, at the same time, they look at the climate change perspective, double materiality of assessment. So, by right, thank you for inviting me, and yeah.
Thank you.
Faster.
Next up, let's welcome Mr. Kong Chi Min, CEO of Centurion Corporation. Mr. Kong, please.
Thank you, Maybank. Thank you, audience, for coming today. Quickly, I would want to start because I have 25 slides to go, and I hope to cover within 15 minutes, right? Okay, just to introduce, my name is Chi Min. I'm the CEO of Centurion Corporation. Anyway, this is actually a property company. If you think that your Zodiac or whatever, just now Master Ken mentioned about should buy property company, this is the counter to go, okay? Now, I would give a brief intro and also the investment merits of the company very quickly. So we'll cover 4 parts, a company introduction, financial overview. I will cover only the latest financial updates that we have updated on 9 months, 2023, and a bit of business outlook and where we want to go ahead. Okay, as far as the company is concerned, we have a very established business, strong fundamentals, and operating in very growing markets. We have 2 core business, which is actually in the purpose-built workers' accommodation. And those who know, like in Singapore, we call it dormitories, right? That's what we do. We have 18 operating assets, both in Singapore and Malaysia, and we are the largest. And consistently, they have been supporting by good occupancy rates and stable bed rents. For student accommodation, I believe many of you will know what is student accommodation. Same thing, high occupancy rates on the back of very stable demand and strong rental reversions. In student accommodation, we also have established an investment platform, right, to manage OPM. Just now we talk about it, other people's money. So we have an investment platform for that, which we earn management fee on. For operating, we have 2 brands, right? We have established 2 brands over the years. This is our own brand, Westlight being workers' accommodation, and Dwell student accommodation being for students. Now, over the years, yes, we have actually proven that we are able to generate quality earnings and also steady cash flow, right, for these 2 specialized accommodation assets. Of course, for us, we have been or rather we have been operating in this industry for a while, and each of us will have 20 years experience in the industry. Very quickly on the corporate milestone, I won't go through the length of it, just to show you that we have been growing since I would say the company actually started in 1984, called SM Summit, doing optical disc business. But in 2011, we pivoted into a new business, which is actually accommodation business or real estate. And with only one asset, 5,300 beds in Toh Guan. And thereafter, quickly we expanded into Malaysia in 2012. Then 2014, we go into student accommodation in UK and Australia. And then we grow further. In 2017, we grow into, or rather we expand into US as well. And then we establish a private fund to manage that portfolio of assets in the US. And after that, we have continued to grow. And I would say that by 2023, which I'm going to share with you later on in terms of our growth profile, we have since grown in terms of the number of assets, the bed capacity, as well as the asset under management. Today, we have 1.9 billion assets under management, 67,000 beds, from 5,300 since 2011. That's a phenomenal growth. 34 operating assets, 15 cities in 5 countries over the globe. We will share with you in terms of our assets in the different countries in the subsequent slides. Okay, a bit on moving on to the financial overview. Okay, just a snapshot in terms of what basically we have grown over the years. As you can see, the revenue growing very consistently over the period. There are some dips, but I'm not going to explain for those some dips, but it's actually more like some leases has expired, and then we'll continue to grow. And you can see that even for profit, I would say the core business or net profit on the core business, we have continued to grow year on year, even including the pandemic years. So our business has actually been proven and reliable in terms of the reliability to generate quality earnings from these assets, despite cyclical headwinds or changes, and also the pandemic, which happens in the recent years. So in terms of revenue, we have actually grown in a compound annual growth rate of 27% since 2011 to 2022. For first half, just to get the latest, 8% growth year on year. And also in terms of net profit, 25% compound annual growth rate since 2011, and 11% growth in first half of 2023. Okay, for revenue, just to share that for 9 months, we have actually grown 10% year on year. Special note that for the third quarter, as you can see, that we have grown 15%. So why is that so? That's something to do with the rental reversions. It has actually grown on a quarter-on-quarter basis, which I'll share with you later on. Now, for financial occupancy, we have also been growing year on year compared to last year for workers' accommodation, which we call purpose-built. PBWA stands for Purpose-Built Workers Accommodation, which is actually our workers' accommodation business. We have actually grown from 88% in terms of financial occupancy to 96% occupancy. For PBSA as well, it's very strong. We are now at 90% for 9 months 2023. That has grown from 84% last year. Just also a glimpse in terms of our split in terms of revenue. So for the two business, PBSA is still pretty dominant. That's about 75% or 75 or 76%, while student accommodation accounts for 34%. As for the revenue by country, Singapore is still our main source of income. In Singapore, it's about 60%. Next comes to UK, which is actually student. Then comes Malaysia, which is accounts for 10%, and that's where our growth in terms of workers' accommodation will come from. And then thereafter is Australia, and the last one being 1% is in US. Okay, in terms of financial strength, the company has been keeping very prudent capital management and also to keep ample liquidity within the group. We have total assets of about 1.6 billion. Just now we shared about AUM about 1.9, but our total assets that we own is about 1.6 billion, with a total borrowings of 0.7 billion. Therefore, give you a net gearing ratio of 42%. In terms of cash and undrawn committed facility, we have a 226 million. Interest cover ratio, very healthy, 3.4%, up 3.4 times. And we maintain also a very good average debt profile of 6 years. That would actually be able to work, weather through any uncertainty in terms of refinancing. For business outlook, okay, I just want to share with you just a glimpse in terms of what basically our workers' accommodation look like. I hope that the pictures are not too small. But this is actually our Singapore portfolio. We have 5 purpose-built dormitories called PBD, which is actually in RC structure, long-term lease, 27,000 beds. We have 4 QBDs. Why call QBDs? Because they are more temporary in nature, and that started during the pandemic where JTC or the government actually built some dorms very quickly to address the pandemic. We have 7,200 beds of this. For workers' accommodation in Malaysia, they are all in the long-term lease. We have 8 assets in total, 27,000 beds, operating in Johor, Penang, and also in Selangor. Okay, a bit on the outlook of workers' accommodation. For Singapore, I believe you may have actually looked at the papers, the news about workers' accommodation being very positive in Singapore, whereby there's a very short, the demand has been strong because of the pandemic, or rather we call it the revenge of a pandemic event. In order to complete the pipelines and all that, there are a lot of foreign workers that comes into Singapore to hope to clear that, plus also the fact that the supply has been quite short. And therefore, overall, in terms of this supply and demand dynamics has been quite good. Therefore, it also translates to, apart from financial occupancy, also translate to good rental reversions. In the news, they are also talking about the dorms. I think dorms having to address the new standards. Okay, they have actually announced that. We are also very ready in terms of complying with that. We are supposed to comply by 2030, starting in 2027. We are already well prepared for that already. But just to note that only the PBDs are affected. The QBDs are in the newer specs, so they are not affected. But the retrofitting of the 5 dorms to comply, of course, is not the highest compared to many of the other operators. Meaning, the reason is because our dorms are already compliant, or more than, I would say, compliant with the most significant standards in which they already have en-suite toilets and showers. So we don't need to do that compared to other accommodation players, right? Okay, so for Malaysia, the demand dynamics has been very good as well. Why? There are 2 push factors. One of them is actually the regulatory changes that the Malaysian government has actually put in. They are trying to enforce also, we call it the Act 446, which is the workers' minimum standards for housing and amenities. And also because of the pandemic, there's, I believe you heard in the news as well, there are some big institutions being sanctioned because they didn't take care of the migrant workers. And because of that, there's also a push into that, because then they will be sanctioned by other countries if they want to export their products to those countries. Okay, so in terms of average financial occupancy has grown as well from 93% to 93% from 86% a year ago. So for student accommodation, we have 10 operating assets in the UK. Right, this is the significant portfolio of student accommodation in the group. We have 2,700 beds. But if you look at the cities that we are in, the cities are all in the super prime areas: Manchester, Newcastle, Nottingham, and Bristol. They are all Russell Group universities, and each city has 2 universities. Right. So for Australia, we have 2 properties. One of them is in Melbourne, and the other one is in Adelaide. I don't think I need to say it anymore because you know that these are the locations that international students would like to go. We have 2. And then the next, we have 5 operating assets in the US, 1,500 beds in the various city, and one of the city that we are in New Havens, Connecticut, that actually serves University of Yale. Okay, so for student accommodation, generally, the demand has been quite strong for purpose-built student accommodation. They are undersupply in those countries, and the 3 countries that we are operating in are really major education hubs. So in terms of the demand-supply dynamics has been quite positive. I won't want to go through one by one, but in terms of the occupancy and rental reversions has been improving quite drastically year on year. Now, just to share with you in terms of our growth plans and also what's next. Okay, this one I'll slow down. I don't know whether I've got a bit of time. Okay, I'll slow down a little bit. So for Singapore, so we operate in Singapore. This is actually our main, I would say the mainstay in terms of where we are. We started from there. So we have been growing quite. Left you 1 minute. Okay. Then sorry, I got to speed up. So in terms of Singapore, I would say that we have actually increased in terms of bed capacity, right? If you take a look, if you aggregate it, that's about 2,500 beds, right? Coming into fruition, coming towards beginning of 2025. Some of them already 800 beds already started in gradually in March this year. For Malaysia, right, there's also a growth in terms of number of beds as well. It's closer to 5,000 beds if you calculate. So those are where we wanted to grow our portfolio and also our revenue going forward. So for the PBSA side, while we never project in terms of what we actually acquire anymore. I mean, in UK, because of the high interest rates environment, we are enhancing our assets on our existing assets and to optimize in terms of the rental reversions. We have done so in UK, right? There are a number of beds in which we convert from ensuite to different formats like studio and also ensuite bedrooms. We also deployed the IoT in terms of managing, we call it managing utilities consumption apart from being green on environmental sustainability. So we also try to explore new markets like in Middle East. Similarly, just they rely on migrant workers just like Malaysia and Singapore. So for the management, in terms of managing our group, we are very happy that, or very lucky in the sense that the demand and supply dynamics in terms of our 2 business across all markets has been positive. Of course, I think a lot of people is talking about the operating costs may go down because of or rather maybe a bit more control because of inflation rates has been abating, or even finance expenses. But we are very cautious because we believe that they will stay relatively high. While the government talks about able to bring down the inflation rate to 2 and all that, but now it's relatively high, it's about 4. So we are quite cautious about this, and because of that, we are focusing to optimize our occupancies and also rental rates. Now, on an ongoing basis, we enhance portfolio and also to comply with new standards, etc. I think that's a given, and we have been proven in terms of track record in enhancing our revenue from year on year. And as we also because of real estate, we are asset heavy. We are going into the we call it the asset light strategy, whereby we wanted to recycle our capital, which we have done so. We have just announced that we have sold 2 properties in Malaysia, but we do a sales and leaseback, so much so that we have recurring income from there. And because of that, we are able to redeploy our funds to the other asset, or rather the growing asset classes. I think I've come to the end of my presentation. Sorry, I think I could have overrun a bit. Thank you so much.
Thank you, Mr. Koh. Last but not least, let's welcome Mr. Gerard Yuan, CEO for United Hampshire US REIT.
Morning, everyone. Thank you for joining us, and thank you, Maybank, for inviting us to present. So we are United Hampshire US REIT. We are a real estate investment trust listed on the SGX main board, and basically we own neighborhood supermarkets and self-storage properties in America. Should have been. I'm trying to show the video here. Give me a second. Okay. Maybe we'll come back to it if I have a chance. I was going to show you a video that shows our properties. Thought it'd be an easy way to explain it. So for those of you who are not familiar with us, we have been listed since 2020. We get our name United Hampshire REIT from our two sponsors. First of all, UOB Global Capital. This is an asset management subsidiary of UOB Bank, and the Hampshire Companies, which is an integrated real estate investment and asset management company in the US with over 60 years of track record. UOB and Hampshire are also the largest shareholders of the REIT. They each own about 8% of us. They have a very good partnership. They've been working together for over 15 years. So we own 22 properties worth over 1 billion Sing dollars located along the US East Coast. 20 of these are grocery-anchored shopping centers. These are what are very convenient single-story shopping centers with large car parks. They are located in the suburbs near where people live and work. In Singapore, we have NTUC, Sheng Siong, and Cold Storage. In the US, our supermarket tenants are called Walmart, Giant Food, Price Chopper, and Publix. Our other tenants at these locations, they also focus on day-to-day necessity goods and services. For instance, we have DIY shops, health and beauty, pet shops, and casual restaurants. We also own two modern climate-controlled self-storage properties. Both of these are located in New Jersey, which is not far from New York City. As I mentioned, we've been listed on the SGX since 2020. We've been very active in terms of growing and improving our portfolio during this period. Since our IPO, we have completed 3 new construction projects, including a large new supermarket in Florida, a new self-storage property in New Jersey, and our latest new sports store for Fortune 500 sports retailer. We have also made 3 DPU accretive acquisitions worth over US $160 million in that time. And we have also successfully recycled capital by selling 3 properties, all of them at healthy premiums to valuation. Last year, we sold one of our properties for 8% more than our purchase price. All in, our assets under management has grown 27% since IPO, and we are now on 3 of the IH Singapore indexes. Just a quick overview of how the US economy is doing. I'm sure a lot of you have read that it's doing very well. Third quarter US GDP grew 4.9%, and unemployment is at a very healthy 3.7%. Thankfully as well, inflation has slowed significantly from its peak of 9% in June 2022 and is now down to 3.1%. With this favorable backdrop, the US Federal Reserve has recently indicated their pivot towards cutting interest rates this year. Just as rate hikes in 2022 caused S-REIT prices to fall, the latest pivot by the Fed has provided a significant uplift to S-REIT prices in the last month or so. So important for a necessity retail REIT like United Hampshire, the US consumer, who makes up 2/3 of the US economy, is continuing to spend strongly. Retail sales increased 4% year on year in November, and grocery sales were also up. US consumer confidence reached a 5-month high in December. There is a growing resurgence of brick and mortar stores, especially convenient suburban shopping centers like ours. With more people working from home, they are visiting our shopping centers, not just on weekends, but on weekdays as well. Our centers have very large car parks and are very well suited for online shopping, for instance, click and collect online shopping. There have been many news reports about the weakness in US commercial real estate values, but I do want to mention that not all sectors within commercial real estate have been affected. As you can see, this is data from the research provider Green Street. Our grocery-anchored strip centers and self-storage values have actually increased quite a bit in the last 3 years. This is quite different from challenges being faced in the office sector, for instance, which experienced a drop in value. Brief overview of our third quarter financial and operational performance. Operational performance has been strong. As you know, everyone still needs to eat and buy their day-to-day groceries and necessities. Our occupancy is over 97%, and our weighted average lease term is also very long, at 7.2 years. Our tenant retention rate is also very high, at 92%, and 63% of our income is from tenants providing what we call essential goods and services. Also, our leases are triple net. This means tenants pay for their own utility costs, and they also reimburse us for the common area maintenance costs. So we're not really exposed to rising energy and utility prices. This is the new large sports store I mentioned. It is for Academy Sports, one of the leading sports retailers in the US and a Fortune 500 company. We built this new store, on existing land that we own. Construction took less than a year, and the store opened in November last year, just in time for Black Friday and Christmas sales. This new store will contribute significant additional revenue and also bring in more shoppers to the property. So this is one of the ways we can grow our DPU without relying on acquisitions. Third quarter financial performance, this has been very strong as well. We saw 12% growth in both our revenue as well as net property income in the 9-month period. Distributable income remains high as well at 23.7 million. And if you look at a like-for-like basis, it's actually very similar to our previous year, which is very commendable given that we've seen interest rates increase quite a lot over the past few months, last year. In terms of capital management, we proactively refinanced almost all our loans at the end of 2022. Therefore, almost all, over 93% of our loans, they're actually only due for refinancing after November 2026. That's almost 3 years from now. And 81% of our loans are hedged to fixed rates. In terms of unit holder returns, in 2023, this has been very strong. On the right-hand side, you see we actually appeared on the front page of the Business Times recently. We were the second best performing S-REIT for the year, and we provided unit holders a total return of almost 23%. The left side shows our DPU yield. This is as at 30th September, but the yield is over 13%, and this is 8.5% higher than the US 10-year Treasury yield. So in conclusion, why invest in UH REIT? We own grocery properties located in the suburbs where people live and work. Our tenants provide day-to-day necessity goods and services. The US consumer continues to spend strongly, and we are actually benefiting from the work-from-home trend as we are located near where people live. Demand for space at our properties has been strong. Our occupancy is over 97%, and we have one of the longest weighted average lease terms of 7.2 years. Finally, our dividend yield is attractive and significantly higher than government bonds or fixed deposit rates. Yeah, thank you.
Sorry, we're just trying to get the video up for Gerard. Yeah, looks like we're unable to play. Don't worry, I invite you all to visit their website. If you want to view the video, it's there. Okay, I'd like to thank Gerard for your time. Now can I invite Dr. Louis Wee, Mr. Kong, and dear Thilan back on stage for the Q&A. If you have any questions, please raise your hand, and then I will come to you.
Hi, good morning. Can I ask Mr. Kong a question? In your expansion plans, there are no mention of the US properties. So are there any plans to expand there, or what are the challenges that you face operating in the US? Thank you.
Okay. Thank you for the question. Actually, for the US, it's actually operating under a fund. Just now, it's just to, actually, I'm supposed to explain a bit more, just at no time. So the US is actually operating under a fund. Actually, the fund actually come to term in 2022, correct. We then extend it for 2 years, which means that we need to exit by 2024, which is this year. So I think the assets has been operating very well. I mean, rental reversions and all that. In fact, the asset is not being affected during COVID times, unlike UK or even in Australia. But it's just that for the US, the challenges are also the interest rates, as you do know, and therefore the yield, I would say, because if you less off the interest rates, it is actually a bit of challenging upon exit, which is why we actually extended, or rather the fund agreed to extend for 2 years. But in terms of operating student accommodation in US, there won't be much challenges because we are a major operator in operating assets in various countries. Yes, by mandate, we are supposed to close the fund. That means to say that means to say we will have to sell all the assets, return the money back to the investors. That's for US. Of course, we will continue to explore opportunities in the US too, because we are already in there, right? But opportunities, US for student accommodation in terms of the rates has not been has been expanded, but compared to the interest rates, is still not the best in terms of a time to acquire any US assets.
Next question. Raise your hands. Okay, gentleman over there.
Could I ask a broad-based question? I mean, which anyone in the panel can tackle. I think there's quite a lot of assumption. Everyone is talking about rates coming down, probably, and that's the signal from the Fed and so on. But I think the geopolitical situation is quite worrying, right? You have you have the Middle East side, Gaza, Israel, and also the Red Sea. The Suez Canal could get disrupted. That's a major upset if it happens. And then also in Ukraine, if the war spreads to beyond what it is now, you get supply chain disruptions, obviously, and then which then results in higher inflation, higher oil prices, higher inflation. How would that affect, your businesses? Or for the head of research, maybe you can comment on the big picture, because everyone, I think, is on that assumption, and quite often everyone is wrong. So what are your thoughts?
Okay, maybe I start. I mean, I think, this is why 2023 was the year that everyone got wrong, simply because everyone expected inflation to, moderate. I think a lot of the things that you pointed out in terms of all the turmoil that you're talking about, the final result as far as how it kind of displays in the financial markets is through inflation. You're going to have significant, inflation is going to be stickier than what everyone expects it to be. And with sticky inflation, it just means that, a lot of the central banks will have less room to cut. And I think that's one of the reasons, we're kind of, worried about the direction of the US market, simply because, the markets continues to go up with this hope that the Fed will cut in the first quarter. You're already seeing March cuts being priced in. But the US economy is holding up quite well. You have this new specter of inflation coming back, particularly given the fact that freight rates have gone up to 4 times, 5 times because of the Red Sea. So that might actually delay, the overall rate cuts that you might see. So Maybank's own forecasts are only for rate cuts to happen towards the end of 2024, not as early as some of the other, not as early as what the markets are adding in. But maybe if the CEOs, would you like to comment as well?
Sure. Hello, can you hear me? I think that's a very good question. I think it is very hard to tell what will happen this year. I think the Fed will be very much driven by what happens in terms of data that comes through. And all the events you mentioned, they are possible events. Just for UH REIT itself, I mean, we are very much focused on day-to-day necessity goods. And we listed in 2020, the day before COVID was declared a global pandemic. And since then, we've gone through COVID, we've gone through, what happened in Ukraine, what's happening now in the Middle East, all the supply chain disruptions that we talked about as well. I think our business model is quite resilient. I think, at the end of the day, people still need to buy bread, eggs, day-to-day things. So on our space, we're relatively more sheltered. I think the fact that we have triple net leases, so we don't pay electricity bills for our tenants as well, things like that will help us tide through this period of time. So we do look at it very closely, obviously, and interest rates coming down will be a benefit. It gives people opportunity to buy things and grow. But even if it doesn't come down as sharply as what the markets are predicting, hopefully for us at least, we'll tide through it quite well.
And Shimin, do you want to comment on that?
Hello. Okay. So I think everybody's guess is everybody's guess. I also don't know which way it will go. Frankly, that's why I attended the Feng Shui talk just now. Hopefully things will be better. But as far as our accommodation business is concerned, well, it's a basic necessity as well for the students and also for the workers. It's just that for the students part of it, they would be actually affected more because of energy costs. Therefore, we will try to hedge the energy costs as much as possible, right? We usually hedge on a 3-year basis, but because of the high energy costs, we have now changed to 1 year, right? At least looking forward that the energy costs will abate, right? Because it's actually really at a peak. Indeed, it actually fall, but whether it would actually goes up again and to that high level, we will have to monitor very closely. But one thing for our business is unique in such a way that we don't have a long WALE, we call it the tenancy periods that cross 3 or 7 years. Our tenancies are typically 1 year, whether it's workers or even the student, 1 academic year. Therefore, every academic year we are able to adjust rates, right? And the rates adjustment at the moment is about 10%. As for the workers' accommodation side, similarly, is also on a 1-year contract basis. And when they got renewal, and then we will be able to adjust the rents. So ours, because we are also in the real estate business, we do increase the rents based on cost and also based on interest rates. Some of the customers will not be very happy with us, but our shareholders are very happy with us. So we just need to strike a balance between the two. But thus far, our rising of rental rates are able to cushion the rising costs. Okay.
Thank you. We got one more question.
Just as a follow-up, I think flow of funds, we've seen the US now reaching almost record highs, right? And India also is enjoying a good run. Southeast Asia has actually attracted quite a lot of new investments, foreign direct investments, and so on. And the general at Davos and elsewhere is that Southeast Asia is in for a good run in terms of the economies. But what I'm wondering, from your angle, are the flow of funds going to come this way as well? I mean, meaning spillover from US and India and so on as favorites, hot foreign money, coming in Southeast Asian markets. Do you see that at all? Because it's rather surprising that Southeast Asia is seen so well, meaning Indonesia, Vietnam, all seeing as growing quite well, but it's not reflected in the markets.
Okay, let me just take that question and then let's go to some corporate questions after that. So you're right. I mean, I think in 2023, we saw fairly large sellings of quite a few markets in Southeast Asia. Thailand saw close to $3 billion of money exiting from institutional investors. The same for Indonesia as well as Malaysia. If you actually look at the December data, you're starting to see money coming back to Southeast Asia. It was the first time you actually saw about around $500 million coming back into Malaysia. It was the first month you actually saw money coming back into Indonesia, and no one was selling Thailand. So I think you're starting to see investors re-looking at this region, given the fact that valuations are quite cheap. As well as a lot of these other factors that you talked about in terms of supply chains moving to this part of the world, tourism reviving, as well as the tech cycle as well. Let's take one more corporate question. One over there.
This question direct to Centurion, Mr. Kong. I just want to check with you. I understand that you have actually gone for REITs some time ago, operation a long time ago, but are you going through that route again to reduce your assets, become an asset-light company?
Okay, that has always been a strategy, will continue to be. Of course, we have tried a number of years ago, but it is not successful because there's technical, they call it a chain listing. Therefore, we have aborted then. But this is something that I think for most real estate company will go to ultimately, right? In terms of enhancing, I would say, the income stream of the ListCo, right? By also redeploy of recycle our capital, right? So this will definitely be still within the strategy of Centurion.
Louis, let me ask you one question. You mentioned in some of your presentations and things like that your inorganic growth is one area that you'd be looking at, to kind of get LMS to the next level. Could you give us some color on where you're kind of looking at this inorganic growth? Where do you see the biggest opportunities? And also, interest rates are quite high. Are you still as willing to do these sorts of growth opportunities?
I would like to address the first question from him. First thing, LMS was, I think, in the past, we actually encountered the pandemic. The business is not impacted because we are quite spread into a very area. So in Malaysia, they allow us to operate even though its pandemic start is March lockdown. We are never stopped, and we venture into face mask testing. Presently, look at the current situation right now. We are listed in Singapore, and we want to do a lot of acquisition. Target area will be in ASEAN first, because a couple of MA already. I hope there will be concrete in the year of this year. There's 2 acquisitions will be in Malaysia. The other one is in China, and the rest we are still in talking to them because. There's always a potential when we looking at the future. Let's say, for example, the assessment for the validation of carbon footprint and also carbon. This is actually a new area that our company, even United Hemisphere and also Centurion, also need to the green buildings, the kind of services that we can render. Hence, we are looking at the future right now for the verification validations, and it's a very bright perspective. We can actually easily, compare to testing, we are easily to talk to lots of companies because all companies are focused on sustainabilities. Yeah.
Thank you. We have time for one more question. Anyone from the audience? One more question? Okay. Let me, Gerard, let me ask you a question in terms of, given the sort of high interest rate and the macroeconomic environment that is still prevailing, and if the Fed, takes some time to cut, how would you be pursuing growth for United Hampshire?
Sure. I think we will, as you saw with the Academy project, we'll always look for organic growth opportunities. If there's additional space, even for instance, next to the Academy building, we do have some additional land that we can potentially build a building on top and bring in new tenants. I think we will always look for asset enhancement opportunities as well. I do believe, if, even for you guys, I think towards the later part of this year, rates will start coming down. And I think you'll see that has a very positive spillover effect, not just in terms of lower borrowing costs for acquisitions, but also the share prices of REITs. It's already reacted very positively to the Fed talking about interest rates coming down. I think when they actually pivot and start cutting rates, that will give you some opportunity to, potentially buy things at accretive DPUs as well.
Great, thank you. I think, unfortunately, that's all the time we have for Q&A. So, Louis, Chime, and Gerard, thank you so much for taking the time to be with us today. Thank you.
Thank you, gentlemen. Everyone, please remain seated. I'd like to remind you to complete the survey and the Google form to claim your shopping voucher. And you can also collect a copy of the Outlook over here, outside. When you leave later, you can also request for a copy from your sales representative. Thank you so much, audience. Thank you.